Let's check in with our reporters now to get some more action beneath the numbers. We'll start with Abigail.
Scarlett, I'm thinking about an area of underperformance. If we take a look at the major averages, or at least the Dow and the S&P 500 relative to the Dow transports, take a look at that. Both the Dow and the S&P 500 recovering after that Fed presser. The Dow transports, however, not so much. At the lows, down more than 2% at that point, on pace for the worst daily performance since August. Has to do with weakness with C.H. Robinson, Ryder, those logistics companies, earnings misses. When we put it into the context of a year-to-date chart, in white we have the Dow transports, which are having a very good year. In blue we have the S&P 500. We see that they've traded in a directionally correlated manner for the most part. Right now we are looking at a bit of a divergence here. The last one did not prove to be bearish for the S&P 500, but it very much looks like we could see the Dow transports go back down into that range. It will be interesting to see if there will be any sort of a connection with the S&P 500. Renita, should that happen?
Thanks, Abigail. Ahead of the Fed rate decision, gold had a little bit of an anticipatory rally, but afterward, the metal trimmed those earlier gains as Fed policymakers hinted they may put monetary policy on hold and assess the impact of the economy of the reductions over the past 3 meetings. Gold has risen more than 16% this year, while the metal has benefited from central banks easing monetary policy. The rally has actually stalled lately as traders awaited signals from policymakers on additional outlooks for monetary easing. Lower rates make gold less attractive since it doesn't offer yields or dividends. And remember, the U.S.-China trade optimism has also reduced demand for gold as a safe haven asset. It'll be interesting to see if outlooks from earlier this month pegging gold higher will actually stand given the Fed language shift. Taylor?
Well, Renita, I'll take it over from here. And we, of course, are waiting for Facebook earnings to be released. I wanted to take a look, and the shares had closed a little bit lower today. We had been lower most of the day and sort of fluctuating in between some of those losses. We're looking for third quarter daily active users at 1.6 billion, monthly active users at 2.4 billion, both of those rising about 7.6% year over year. Top line revenue, we won about $17.5 billion. Now, there's going to be a lot of discussion about cleaning up the platform. So take a look at the impact of free cash flow and operating margins, as a lot of analysts are saying that operating expenses could rise as 45% next year as we head into the election and Facebook really works to cleaning up that platform. I want to come and take a look at a chart here that I'm showing in my terminal. When we talk about antitrust and Facebook's clout that they have on this business, 21% of everyone on the planet looks at Facebook at least daily. This is what the regulators are talking about when they talk about size and scope of this company. This also, of course, folds into the strength of their ad business, of which Facebook and Google really do lead. Right now, it looks like the stock could be trading at a little bit of a regulatory overhang, if you will. But for now, we'll wait for those earnings to cross at any moment.